In Ed Yardeni now. He's the president of Yardeni Research. Ed, welcome back. It's nice to see you. Happy New Year.
Thank you, Scott.
So I hope you heard the Gunlock sound talking about valuations to be, in his words, record-breakingly high. Are you concerned, too? Because you've been really bullish.
Well, I'm concerned about valuation. Certainly, they're not cheap. And as Gunlock pointed out, by any historical precedent, they're stretched. But on the other hand, until recently, we had record low bond yields. We still have record low bond yields, by the way, in the corporate bond market. And the mortgage rates are at record lows. Over in Europe, government yields are at record lows. The outlier here, as you pointed out, is the 10-year government bond yield has moved up from about 0.5% last August to over 1% now, maybe 1.2% shortly. And that's got everybody spooked. I think it's actually a sign of confidence in the economy. And it looks as though real GDP is going to get back to where it started before the pandemic by the first quarter of next year, which is really extraordinary. So the earnings picture is looking pretty good. I'm still using, I'm using 4,300 for the S&P 500 by the end of this year and 4,800 by the end of next year. I would become a lot more concerned if we get there a lot sooner. And I have to admit to you, Scott, this market's been stampeding over the bulls. I've been bullish since March 25th in the morning. And every time I've set my target, it just stomped all over me and went right ahead to higher highs.
Do you see the 10-year yield hitting a 10-month high? We're showing it on the screen right now. It's obviously a point of concern to some, not all, to some.
Scott, let me make an observation here, and that is there could be a bullish implication of all this. The Federal Reserve is watching that rate just the way we are, and I think the Federal Reserve would like to keep that bond yield closer to 1% than to 2%. I think they were trying to do that at the end of last year. It's just my friends, the bond vigilantes, are starting to get a little bit more antsy here about the economy being too strong, deficits being too large, too much government spending, and inflation making a comeback. I will not be surprised if at some point here, if the bond yield continues to go up, if the Fed announces what they've called yield curve targeting, which basically means setting a target for the bond yield. Well, that would be bullish. It would actually lead to a melt-up.